Hi folks, welcome to this video. Please read the disclaimer. Today we're going to talk about IPO data. And this IPO data might disappoint you, especially if you are a big IPO investor. And in my view, a lot of folks go to the IPO market to basically flip a coin and to play the lottery. There are very few people who really believe in the long term story of that company that is coming through, and not just individuals. It is also about corporates and funds and institutions who are playing this flipping game. Everybody basically wants to flip the IPO, post its listing, and just get done with it. And that is essentially causing, even on the other side of the IPO, the promoters, the private equity players who are offloading their stock, they are also not saints. They are the sharpest minds out there. They are the sharks. And why should they offer you anything on the plate? When they are selling their stake, they will extract the last ounce of flesh from you. And that's what needs to be understood, is that an IPO does not mean halwa, right? It is a very thin line between getting something of some value there versus getting ripped off mostly. So usually what happens in IPO, a lot of hype is created. News headlines will scream shares gray market premium is 80%. Investors are cheering. Big marquee names have been put into that pre-IPO. That itself is a scam and a discussion for another time. That when a company decides to go for an IPO, in the last 3 months they will allocate a lot of stock to marquee names in the market. Promoters will up their stake. Basically everything to rig that game against the retailer who's going to come in. So everything is there, that the retailer will come in FOMO. He or she will, just blindly ride the wave, and then we'll be able to dump all our stock on. That is the whole game, basically. So, people are lured into this. Investors are lured into this. The influencers are put into service. So, a lot of influencers will be put into service to talk about that particular upcoming IPO. Gray market premiums will be managed a lot of times, and SEBI recently has come out with a proposal that they will have a regulated pre-IPO platform, which I think is a very good idea, because a lot of garbada happens before this pre-IPO business. So, getting in early, riding the wave, and cashing out big is the game that is played. The allure is hard to resist. In the secondary market, in normal situations, maybe not in this last 3 4 5 years, but in normal situations, most people are not making money, so they feel that IPO is that place where some quick money can be made, just because there is scarcity. People are lining up to get the allocation, and those who will get that allocation basically will make some money. This is exactly the same as a lottery ticket. You buy a lottery ticket, some 0.001% will get that lottery in their name. They will make some money. Rest will basically lose the either the lottery ticket cost, or in this case the interest of on the money that they held, or even worse, if the stock doesn't list above the IPO price, then you've lost some capital as well. So this exciting prospect is basically, is it a guaranteed path to wealth, or are we just playing high stakes lottery? Let's find out with some insights. So we've seen the data for the last 10 odd years, and what we found is that the allure of quick riches is often overshadowing the underlying reality of the IPO investing market. And long term wealth creation track record of IPOs in India is often much worse compared to secondary market investment. So, if a person was investing in IPOs for 10 years versus the secondary markets, you would find that most of the secondary market investors probably made some better outcomes. Now, from Jan 1, 2014 till December 31st, 2024, 897 companies uh, offer documents were filed. 1,489 companies raised 6 lakh crores through IPOs, of which 4.6% generated more than 100% returns on their listing day. So 4.6% is basically very, very low number. So first, there is a very low probability that you'll get that stock. And then out of all the stocks, only 4.6% companies actually had a significant 100% sort of gain on listing. 47% of all IPOs generated between -10 and +10% on listing. And nearly one quarter of companies actually closed with a negative return completely. So that could have been -25 to 50%, or -50 to even 100%. Uh, so 0 to 10 to 25, also 75 such stocks counts. So the prospect of significant gain on listing day is often overstated. This is the stats in front of you. And only if you made some good money would this game really be worthwhile doing. But these outcomes are quite rare. Like, it is not like every other IPO is going to make you money. So many investors, once the IPO is listed and it disappoints, let's say, then they will hold on to those stocks for long period of time. कि किसी दिन तो मेरा stock चलेगा. That is the worst form of uh, a holding of a stock. In every stock investing decision, whether it is IPO, whether it is secondary market, any which way, hope is not your strategy. Hope cannot be a strategy. Your strategy has to be that I believe in this stock and I'm going to hold it for 10 years. That could be one. The second could be I am following the trends. Till the trend is there in this stock, I'm going to hold it. Or third could be I'm expecting something in this company. This company is going to come out with this kind of result, or this management change is happening. Till that point is achieved, I'm going to hold on. So there needs to be a reason why you are holding on to a stock, and that cannot be hope. So now let's take a look at long-term performance for these stocks. So median annualized returns of Indian IPOs is 5.9%, whereas Nifty performed 12.8% in the same time period. Nifty 500 performed 14.8. So there's a huge selection bias now. And this, of course, study is assuming that you invested in all uh, IPOs, right? You could have gotten lucky and invested in that one IPO that really did well. That is also possible. But in general, because you are considering the whole IPO market and the entire returns made by anybody who's invested in them, this is a very, very poor outcome. And I'm not surprised with this outcome, because who are you facing this challenge against? You, as a retailer, are buying stocks from the sharks, and you think you can win from them? Well, good luck. By issue size now. So even larger IPOs, like these are 0 to 50 crores, 50 to 100 crores. Just look at the returns, median annualized returns. 0 to 50 crore IPOs, 4.8%. 5.3% for 100 crores. 100 to 250 crores, 6.2%. 250 to 500 crores, 3.6%. And only larger IPOs, 500 to 1000 crores, 9%. Still not anywhere near Nifty returns. And 1000 crore plus is about 10%. Very, very abysmal data, I would say. I mean, I never invest in IPO market. I allow the stock to list, get a history. Once trends are starting to form, I'm happy to ride that wave. Zomato listed at, I don't know, 140. It came down to 40 rupees, then it started to go up. At 80 rupees, we saw that a trend is getting formed now, so we bought it. Paytm is another case like that. So what is the rush to buy that stock? Let it prove itself in the market. It's going to be there for a long time. You are also there in the market for a long time. You can ride the wave any point of time. Why should I risk my money with something which is unknown at the time of the IPO? So none of these segments performed anywhere close to where Nifty is. Now, the poor performance of IPOs is not limited to any specific category or issue size. It is all universally pervasive. And the multi-bagger dream from IPOs is often too good to be true. So this dream that is getting sold, that this stock is going to basically, that's your sort of vehicle for the riches. That kind of a mind sort of brainwashing is getting done in the IPO space. So the key takeaway here is that the promise of making substantial money through IPOs is just like playing the lottery. So if you are clear about this, that you are playing the lottery, there is going to be 99% of your basically trials will fail, and perhaps 1% is going to do good for you. So if you have that mindset and you are playing it with that thought process, then it is fine, because then you will not be disappointed, right? But a lot of folks don't think that way. A lot of folks think that IPO is the way to riches, and that certainly it is not, because they are going to underperform established market indices both in short term and the long term. Even larger IPOs, which are slightly better performers, because larger IPOs are difficult to rig or difficult to manipulate, but then there also the sellers are the promoters and the sharks. So the potential for quick gains is overstated always. Any IPO that has come in the recent past, you can check their uh, IPO listing price or IPO at least offer price, and you will find that it is completely out of whack. So for sustainable wealth creation, what should one do? Avoid this thrill seeking, this betting attitude, and this process that let me try that I get some overnight gain. I think this is futile. 99.99% have realized this. It is high time that if you have been an investor in the market, you also realize this. Allow the stock to tell you when to buy it. You should not be deciding when to buy it. The reality behind the hype has to be understood. Uh, my very good associate Sandeep Sabarwal, who is also my junior from IIT, he came out with very nice tweets, two of them. He talked about Boat is coming out with an IPO at a valuation of 13,000 crores. Sales have been flat for last 3 years. I mean, imagine a company coming out with four times sales, four plus times sales, and completely flat, growth line there. And according to him, and he's a value expert, I am not, that valuation should not have been more than about 3,000 crores, at stretch 4,500 crores. But because buy at any price has become the name of the game, that if any new name comes to the market, all mutual funds, all uh, uh, managers who basically buy at any price are going to queue up for this IPO. The second one he talked about was Urban Company, and there the valuation is 15,000 crores, uh, and a profit of 150 crores is going to be made 3 years from now, according to him. So 100x of 3 years forward earnings. I mean, this is basically getting sucked into newer and newer companies at higher and higher valuations. Zomato, Paytm, Nika, uh, car trade. These are some very good examples where if you had allowed them to find their base and stable uh, zone, then you can build your position in it and follow that trend. But if you want to jump the first day and burn your hands, then of course nobody can save you. So tell us in the comments how you like this content. You can also watch this other video if you like this content, and how many IPOs have you applied in, and how many successes have you had. Do let us know in the comments, and thank you so much for watching this. Do subscribe to this channel, do like and share these videos, and I'll see you in the next one. Bye.